What's up, everybody? It's John McLaughlin with Ajay Shaluga Enterprises, aka Ashe Wealth. Hope everybody is doing well out there. Peace and blessings to everybody. Hope you had a good week in the markets. If you are already involved in the markets, investing and trading, etc., we had a good week over here. So tonight we was just gonna pop in, make a quick little video talking about day trading and swing trading, and kind of the different approaches between the two, and our insights to kind of the psychology behind them and the execution behind them. Whether you are, already trading or just starting trading or whatnot, I thought it might be helpful to just kind of talk about the differences and how people approach trading. Some people will say, that, a trade is a trade regardless and it's all the same. But in my personal opinion, I would probably disagree with that a little bit. I think there's definitely a difference between day trading and scalping and swing trading, in terms of the psychology and the execution behind them. So we're just going to kind of share some of my insights on that. So for day trading, first of all, a lot of people, similar to how you have fundamental people, you have technical people, and most people kind of favor one or the other. It's kind of similar with day trading and swing trading. You have a lot of people that will favor one or the other, and that's perfectly fine. I always say, do what works for you and do what is comfortable for you. But that's why I would say that they're not all the same, because it might not, the way they're executed is kind of different, and what's comfortable for some people might not be comfortable for other people. So with day trades, it's a lot, it's obviously shorter. You're getting in and out of a play in the day. If you're scalping, you might be getting in and out of a play in a matter of minutes, so to me, it's really about the anxiety. Okay, is really what it comes down to. So a lot of people that prefer day trading, they prefer it because holding contracts makes them anxious. And I would say that's one key difference, is that if you're going to be a swing trader, you really have to be okay with the ups and downs of a contract. So if I'm buying a position that goes out 2, 3, 4, 5, 6 months, a year, whatever, as we know, the market doesn't just go straight in a direction. So it's going to go up and it's going to go down, and you have to be okay with that. Like, you have to not only be okay with that in theory, like, you might go into it saying, yeah, okay, I'm going to ride this play out, but you have to be okay with it in the sense that you have the discipline to override your anxiety, when that play is not going the direction you want it to go. So if you buy, a contract today and it goes out 6 months, it could be in the red for the next 2 weeks, for all you know. And a lot of people, what their struggle is that they, that second week turn comes around, they're still in the red. They're down 5, 10, 20%, maybe more in some cases, depending on, your entry and all that. And they're like, man, I don't know about this. They start to lose that trust. They start to lose that trust in the play. And, you really do have to trust yourself. I talk about that in one of my blog posts on the website, ashewealth.com, trust versus hope. Okay. So if you are getting into swing plays on the basis of hope, and you're like, okay, I'm just going to buy this long contract, I'm just going to hope that it goes my direction, that's not the ideal way to go. You want to have extreme trust in what you are making your decision on, whether that be something fundamental or something technical or whatever the case may be. You need to have that trust so that, if you're down a month from now or a week from now or whatever the case may be, depending on how long the contract is, that you have that trust in yourself and your analysis and your system that, okay, I'm not worried about it yet. I'm going to stick to my plan. It's all about sticking to your trading plan. Now, with that said, there should be in the trading plan, in my opinion, there should be some maximum level of loss that you're willing to accept. So there might come a time where it reaches a level where you're like, okay, this is not acceptable for me anymore. I'm going to go ahead and cut my losses. And then you could consider repositioning into the play at a better opportunity, or when there's more momentum gaining. So by all means, I'm not just saying, that would be more hoping, where if you're just holding on to the contract and it's down 90%, in my opinion, you would have gotten to that point where you're just hoping. You're not actually trusting. You are just hoping that, okay, man, hopefully this turns around at some point. So, it's a fine line between that trust and that hope, but it's really important. And so when you're getting into those swing plays, there has to be something you have to have extreme confidence and trust in, so that when it does go on that ride up and down, you aren't panicky, you're not anxious. And that's like I said, that's a key thing that leads a lot of people into day trading, is that the fact that they know they're anxious, and they're like, oh man, if this contract's down 3 days from now, I'm not gonna be, that's not gonna be cool. Like, I'm gonna be panicking, and I'm gonna, not be comfortable. And like I said, it's really all about doing what's comfortable for you. There's no real right or wrong way. But when it comes to day trading, to me, it's a much different animal in that it's more it's a little bit more precision based. Okay, so obviously on a swing trade, you want to get a good entry and stuff, but it's probably unlikely if you're swinging a play. And I'm not talking about necessarily a swing where I'm buying it today and I'm selling it tomorrow. I'm talking about what I would call a real swing, or a true swing, where I'm planning to hold it weeks or a month or 2 months or whatever the case may be. It's a little less precise. You're probably not going to get in at the perfect bottom price. And with day trading, it is, precision is much more important. Again, whether or not you use technical analysis, you do have to, your entry and all that is very important. And, some people will say, oh, entry is easy, but I mean, from my experience, I know that's one of the main things that traders talk about having difficulty with. So I wouldn't necessarily say it's easy, particularly if, like I said, if you're day trading, because you're trying to get in at an optimal or near optimal time. And, it can be a little more challenging to do so. So it's a lot more precision based. In my experience, I don't find that I really avoid the anxiety though with day trading, because usually when you're day trading, you're getting a shorter contract anyway. So like, if I'm planning to day trade something, I'm not going to buy a contract that goes out a month or 2 months. I might get a contract that goes out a week, maybe, but I'm not going to be buying a contract with 2, 3, 4 months on it if I'm planning to day trade, because that just doesn't really make sense to me. And it limits, the type of return you can get if you are day trading. And that's a key thing is, like I said, trading plan, knowing what your plan is. So when I day trade, I'm buying short contracts. It either is a contract that expires the same week, or it's a contract that maybe expires the next week. That's a lot. That's something that people do, is they'll be like, okay, today's February 12th. So maybe you buy like a March 19th monthly, because that's a monthly date for March. You buy a contract out to March, but your plan is to day trade. And what happens is, if your day trade doesn't work out for you, you end up holding it with the idea of, oh, well, I still have a month. And again, going back to the idea of trusting versus hoping, if you go into a trade saying, I'm going to day trade this play, but you buy yourself an extra month of time, and then you decide to hold it because it didn't work out the way you thought, in my opinion, you're kind of moving from that trusting yourself and trusting your system into that hoping. So your plan didn't work, and so now you're just saying, oh, well, I bought myself some extra time, so it might work out next week, or whatever the case might be. So again, this is just my opinion. Obviously, this is not investment advice or anything. This is, my experience for educational purposes. But, so the way I look at it is, if I'm day trading, if I'm getting if I know that I'm going into a trade with a day trade mindset, if it goes against me, I'm cutting it off. I have a limit to what I will willing to lose on a day trade. And then I will, again, have that option of repositioning. So, and in my opinion, day trading, my limit is smaller than on a swing trade. Because on a swing trade, I might be okay getting down a little bit further than I do on a day trade. Because again, I'm usually on a day trade, I'm on a shorter contract. So, when it starts to go against you, it really will lose its value a lot faster than a long contract. But going back to kind of trusting your system, so if you know that you are a day trader, if you know that I'm not comfortable holding my contract more than an hour or 30 minutes or 2 hours or a day, I don't like holding my contract to the next day, then stick to that. All right. And don't just, hold a contract because you have another week or two and just hope, trust yourself and say, okay, I'm not comfortable with that. I'm going to exit this trade and I'm going to either reposition or look for a different trade elsewhere or whatever the case may be. So, it's really, it is, I think, a different psychology between the two. And I understand how there's people that prefer one or the other, because like I said, it's kind of a different, really a different kind of way of looking at things. So like the swing trader they don't like feeling rushed. They don't like feeling like they have to hit something, quick. They don't like having to strike quickly. They don't have, if they do a short trade and it's down for the first 10 minutes, they're worried, because they're like, oh my gosh, this contract doesn't last as long, and now I'm down, and if yada yada. So it's really a matter of understanding your own patience level, your own discipline level, because they both require discipline. But with the swing trading, you need to be able to withstand the swings, the ups and downs. And if you know that that's not something that you do well, then you should not, do that. Don't do it. Where the discipline comes in with the day trading is, sticking to your plan. If it goes against you, don't just let it go to zero and hope it'll bounce back the next day. Have an exit point in mind. You should have an exit point with your trade either way. Okay, a lot of people will have an exit point. Well, if I get to 25% or 50% or 75% profit, that's my exit point. Or if the stock, the actual stock price, the underlying asset price gets to X level, then that's my exit point. A lot of people don't have clearly defined exit points to the downside. That's something I've definitely found, working with people, teaching stop loss and stuff. A lot of people don't have a defined exit point on the downside, and you should, whether it's based on a technical level of, if the underlying asset drops at this price, I need to exit, or if my contract gets down 20%, I need to exit. That needs to be part of your plan. All right, you need to plan for what happens either way. And speaking about goals for profit, I think that's another thing that I think trips up day traders sometimes, is they only want to be in contracts for a certain amount of time, but they also want to stack up big wins. Okay, and you know, by all means, you can get big wins day trading. I do so myself fairly regularly. You know, in the high tech options class I've taken with Delancey Hamilton, you know, we got the Chart Masters crew and they be killing it. You know, everybody in there, you know, is pretty sharp and they can scalp a play, you know, pretty well and get pretty nice sizable returns in a short amount of time span. So you absolutely can do it. Especially if your TA game is on point. But if you really look at like the true definition of scalping or the true like theory of scalping, it's to stack small wins. All right. So the whole kind of concept of scalping was based on not staying exposed to the market for long periods of time. So that's why it's short trades, but also capturing a lot of small wins because the small wins add up. So if you like Google scalping, that's what it's going to talk about. It's going to talk about being able to stack small wins. And a lot of people get in this habit where they want to scalp, they want to day trade, they only want to be in a trade 30 minutes, 45 minutes, 2 hours, but they want 75%, 100%, 50%, whatever the case may be. And like I said, you can get those. But, you know, that's what a lot of day traders' biggest weakness is, in my experience, is that they don't want to take the 10% and the 15% or the 20% or the 5%. You know, they only want to be in the trade for an hour, but they still want to get 75% every trade. And it can definitely come back to bite you because, again, if you're dealing with short contracts, as soon as that contract starts to work against you, you know, that time value really works against you, and it'll really, you know, shorter the contract, the more volatile the prices are going to be. So there's more opportunity to gain. Yes, there's also more opportunity to lose. You know, the quicker your contract is going to go to zero, the shorter it is. So, you know, myself personally, I'm kind of a hybrid. Like I said, I like to do a little swing trading and a little day trading. I feel like that allows me to alleviate both sides. I'm not telling anybody you have to be like me. I'm just saying, you know, saying my approach to, you know, how I've kind of worked through it. I'll do kind of half and half. So like whatever, you know, whatever portion of my account that I'm willing to trade at a given time, I'll basically have half of it, you know, not precisely, but, you know, roughly half of it on trades that I'm willing to sit in or planning to sit in, you know, for days or weeks sometimes. In other case, and then I'll have the other portion that's available for day trading so that I can get in and out of plays. And I found that that alleviates a lot of that anxiety for me personally. So like if I have a swing trade that I'm planning to hold for a month, you know, it can be down 10, 20%, 30% maybe. But if I'm making money over here on my day trades, it, you know, kind of negates that anxiety, because once the swing trade does come around, it's almost like bonus money. So say I have $500, I put $250 on some swing trades, I put $250 on some day trades. So one of my day swing trades is down, you know, $100, okay? But I also make, you know, that day $200 on my day trades. So when that swing trade starts to get right, even just by getting, you know, I've already added money to my account with my day trades. So even when that swing trade does get right, and just by getting back to where, you know, just getting back to even, it's basically like I'm adding money to my account, you know, balance, because it was already up through my day trades, even though my swing trade was down. So then once that swing trade starts to build momentum, it's almost kind of like, it's a mental, for me, it's kind of a mental trick I play on myself, where it's like, okay, now I'm making even extra money because I was already up based on my day trades. And now this swing trade that was down a little bit is also moving in the right direction. So I don't know if you follow me with my psychology there, but that's how I kind of play my psychological game with myself, kind of mixing and matching the swings and day trades. But yeah, that's kind of my thought. My main takeaway would be to know yourself, know who you are, and know what you're comfortable with, um, and do what's comfortable for you. I always stress that everybody's different, and there's no one way to do things. There's no right way to do things. If you're not comfortable holding a contract longer than an hour, then don't do it. Don't do it just to hope that something works out. Hold the contract. If you get your win, you get your win. If you don't, cut it off before you hurt you too bad and move on to the next play. All right. If you know that, hey, I can't be dealing with this day-to-day stress and anxiety, it's too hectic for me having to watch stuff on a daily basis or whatnot, then don't do it. Stick to swing trading. If you like to do a little of both, then do a little of both, but have a clear plan. Understand they are different psychologically. They're different in terms of how you execute them, and the precision necessary to execute them, and kind of the patience level needed to execute them. Have a plan. That's one of the things that I definitely learned from Lance. That's super important, is having a trading plan. Now, I don't write mine out in detail like I should, like I've been taught to by Lance. But a trading plan is key, and it should cover, several things, and that's just one of them. Is you should have an idea of, not an idea, you should know what type of trade is this. Is this a scalp? Is this a day trade? Is this a swing trade? If it's a scalp, don't try to turn it into a swing trade. Even if you have an extra week on your contract time, on your expiration date, if your plan is that you're scalping it, don't hold it and turn it into a swing just based on hope. Now, on the flip side, if you have a swing trade and you are up a certain amount that you're comfortable with, that's according to your plan, you can close it. Now, you might say, well, that's not sticking to the plan either, but in my opinion, it is. So the difference would be with a scalp. If I hold it, if I go into the trade and I'm planning to scalp it, but I end up holding it because I have an extra week on my expiration, like I said, I moved from trust to hope. Okay. I'm not trusting my plan. My plan was a scalp, and now I'm moving into the area of hope because it didn't go the way I thought it would. So my recommendation, or what I would do, is I would stick to my plan and I would get rid of the contract. And like I said, I could reposition or whatnot. With a swing trade, the ultimate goal of any plan is to profit. So if I'm in a swing trade, if I buy a contract that goes out a month or 2 months, and I buy it at 10 o'clock in the morning, and come 3 o'clock in the morning, I'm up 50, 60%, or it's hit my price goal, it's hit the target goal price that I had on it, or whatever the case may be, then I am still sticking to my plan, even though even if I close it then. If my goal is if I have a goal of making 30% per trade, or if I have a goal of, I think it's going to hit this particular price, the actual share price, then that is sticking to your plan, and you can close it. And then if you still like it as a swing, again, you can reevaluate it and see if it has more room to run, and and then reposition yourself if you want to. So ultimately, like I said, wrapping it up, know yourself, know who you are and what you're comfortable with, what you like. That doesn't mean you can't change, as it goes on, as you get more comfortable with things. If you start out one way, it doesn't mean you have to stay that way forever. But do what is comfortable for you. Develop a plan that's specific to what you want to do, whether that's day trading or swing trading, and then stick to that plan. A lot of times that's the hardest part right there, sticking to your plan. I know that's been one of my troubles that I've experienced, through my trading journey. It's having the plan in mind is not necessarily the difficult part, but sticking to it is the difficult part. But anyway, hopefully this video was helpful for somebody. Definitely reach out if you if there's anything we can do for you, if you'd like to subscribe to Ashe Daily, which is our daily reports that we put out with option placed for your consideration, definitely check us out at ashewealth.com. If you want to join our training program, we do that as well, where we teach you kind of our process behind Ashe Daily. We'll also be doing webinars at the end of February, February 28th, March 3rd, March 5th. So definitely check us out. Check the links out below. Subscribe, share. Appreciate y'all, and we'll talk to y'all next time. Peace.